let's jump into what I'm seeing on the vol side. So here we've got realized volatility. We were 40, spiked to about 50, have been grinding a little bit lower, but we're coming in at between 40 and 50 right now. So let's say mid to low 40s. That was on the rally. Because we had the knee-jerk higher, obviously that's kind of preserved a bit of realized vol, whereas implies have started to trend lower. And that has created this kind of negative carry, negative volatility risk premium VRP. That's what that means. That's just saying that implied vols are currently lower than realized, but that's because realized has been high and we've had a violent snapback as well. Once realized vol kind of settles into a range, you will see that orange line trade back down and carry will go a bit more neutral again. But the minute we're showing negative carry, which means implieds are trading cheap to the historic realized that we have seen. But this is typical when markets sell off on high vol and then bounce. It's very typical to see this. And so I wouldn't necessarily take it as a signal to buy vol because it's trading below realized. Generally, implied vol leads realized vol. And so that move lower in implied is signaling that the options market believes we are stabilizing and realized vol will start to come down as the days go by. All right, looking at the term structure, you can see a shift lower in Bitcoin, about a couple of vol points, as you can see in the front, and pretty flat in the real long end there. So kind of the whole curve shifting down, but really being driven by the front where we were in an inverted term structure, marginally inverted. We are now back to kind of mostly contango. Looking at ETH front end was actually quite high up there at 75. Has come in a bit, but most of the curve from sort of 2 weeks onwards has actually shifted higher by a couple of vols. So you can see more of a parallel shift higher in ETH vol because again that ETH bounce was pretty aggressive, you know, order of magnitude near 10% quickly. So the market doesn't really want to let you have that vol too cheaply when it can do those kind of wild swings. Here's the kind of time series. Obviously, the highs that we got in the short end vol and the 1 week was about 52 on Bitcoin, did get crushed back down to around 40. And right now you can see we've got the front end at 40 and the back end at around 46. Ethereum highs in vol were much higher, around 90 in the front end. Obviously, the whole curve then collapsing back. And we're sitting at about flat around 70 vol right now in terms of across the curve. Looking at skew, obviously markets were weak, so put skew was pretty well bid. You saw about an 8.5 vol put premium in the 1 week. And then as we have started to bounce, you've seen that erode back towards only a couple of vols. But you can see the curve's pretty flat in terms of skew. I'll show the term structure in a minute, but you can see in general that skew has compressed back, still in put premium, but much narrower than it was in that front end where we were seeing like 8 vols, things like that. Same story in Ethereum. We had very extreme put premium previous. That's come in from like 10 vols all the way back to around 3 in that 1 week. And then those calls in the long end still retain a little bit of a bid. See that here on the term structure. This steep contango in the red line shows that put premium was, you know, quite elevated. But as we've bounced, you can see it's only about 3 vols now in the front and that back end kind of staying where it was. Ethereum, you can see that doesn't really show quite the extremes that we were at in terms of when it was like minus 10. But, you know, again, that Ethereum put skew coming in at around 3 now. But as we go through to January, kind of flips through 0. And you can see there's a call premium in the expiries like March, June, September next year. Looking at relative value side of things, you can see here a shift higher over the course of the week from about a 25, 26 vol in the front up to around 30. So Ethereum holding more of a bid again in vol, having a 30 vol premium to Bitcoin, but that has been very consistent now in that order of magnitude. It doesn't seem to be going anywhere, and actually it's propagating across the whole curve. So you can see even sort of March next year has gone from sort of 22 to 24.5. So this is interesting to see even the back end vol spread moving higher as this is becoming very structural, that there's just not as much supply of Ethereum vol. The realized vol is consistently higher than Bitcoin, and it just seems there's just not as much appetite to sell Ethereum as there once was. So Bitcoin very much being used as the funding leg for vol selling strategies. All right, guys, that is your quick summary of what I'm seeing in crypto vol this week. Cheers.
Hi, everyone. Thanks for making it to the end of the video. Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights, flows and positioning report, and my portfolio trades, and a whole lot more, you can sign up at options-insight.com. I'll see you soon.